Hey, everybody. It's Eric Stanford, board president. I'm in Unit 29. We have the um, Chelsea on from our insurance company is going to go over a few things. Please, if you have questions, save them to the end. If you would please let Chelsea go over her spiel, and we'll go from there. Mark, Chris, you guys, anything you want to add to that right quick?
I'm all good, Eric. Just welcome everybody. I'm Chris Nix. I'm in Unit 13 and on the board with Mark and Eric and Lance and Robbie.
Cool. Thanks. All right. Chelsea, floor is all yours.
All right, thank you very much. So I'm going to give a quick brief introduction, and then I'm going to go over the document that Smokey has shared on the screen. Hopefully everyone can see that. If not, that's okay. Smokey is going to post this on the portal and send it out via email, I believe, tomorrow, so that all of the owners have a copy of it. So my name is Chelsea Storms. I'm one of the brokers on the team at Alliant Insurance. We insure condos throughout Texas. It's our niche. It's what we specialize in. I'm a former community manager myself. So here to help Smokey and the management company and management team with anything insurance related, making sure that your lenders also have copies of their certificate of insurance. And, if you're going through a conveyance or selling your unit or buying a unit, that all insurance requirements are being met, and just acting as an extension of the service team. So with that being said, what we're going to go over tonight is the insurance renewal. The insurance policy for your association renewed in April. This is our first year on the account. The account did move over to us. We found some savings and a couple of the premiums this year, several different policies. And then we also made a couple changes just to make sure that the condominium had all of the proper coverages for certain types of losses that we see in this type of business, which is what we call habitational real estate, meaning someone lives there and it's occupied the majority of the time. Habitational real estate is pretty different than commercial. So if any of you purchase insurance for your business or for an office building, the way that they write it is slightly different. And we also approach different carriers for this type of risk. So our goal today is to make sure that all of the owners understand what the master policy covers, and then also what you should be carrying on your HO6 or Texas condominium owner's policy that you have through your own private agent. In the event that there is ever a loss that originates in your unit or any type of really bad storm where a high deductible would apply, we want to make sure that you're carrying the proper insurance and you have the correct information to request assistance from your personal carrier if that ever applies. So with that being said, there's several different types of insurance that the association has. Property is usually the hottest topic because property is by far the most expensive. Property, obviously, it's going to cover the property, your home, the outside, the walls out, and this policy follows the governing documents exactly how they're written. So that's the way that condominium insurance is structured. Is that what the documents say is exactly what the policy would provide. General liability, which is going to help the association if there's ever a slip and fall, an injury, or certain types of suits. Not owned auto, this is for the board members and the management team that might be conducting business in their vehicle on behalf of the association. Should they get in an accident, that will cover it. That is no additional premium, just so you know, that is included in the general liability policy. The crime and fidelity is going to protect the association's assets and the money that they have in their bank account should there ever be any type of embezzlement, fraud, or crime-related activity to the association's funds. The directors and officers policy is going to help protect the board of directors and in case there's ever an error, an omission, or any type of lawsuit that might come about to the board of directors based on the decisions that they've made in the best interest of the community. And then last, in some cases, is the workers' compensation. Since there's no employees of the association, this is a very inexpensive policy. We see these claims come up, and it's usually when someone's acting in the best interest of the association. There's a storm and they're trying to open a gate during a power outage or something like that, and an injury occurs. So that's the least expensive policy, but it does provide sleep at night coverage, and it can also prevent lawsuits in the event that somebody is injured while they're helping out with association business, somebody being specific to the board of directors or the management company. So like I mentioned, of these, the most popular, the highest line item on your insurance renewal is going to be the property insurance. Property insurance has a couple different types of deductibles. And it has to follow several different things. Not only does it follow your dedicatory instruments, your governing documents, when in the event that there's property code that applies to your association, whether that's Texas Uniform Condominium Act or some of the other laws, it's going to follow that as well. It's going to make sure that the association is taking care of their responsibilities and ensuring you for what you're paying for within your assessments. In this situation, the property covers the general common elements as well as the interior finishes, which are the original as-built finishes. So what that means is when the community was initially built, however it was built at that time, is what insurance would pay to bring it back if there was a fire or a flood or any type of water loss. So if you bought your condo, let's say somebody else owned it prior, they've made some upgrades, they've installed, nice wood flooring or marble cabinetry, anything like that that's above the original specification, that's what we call a betterment and improvement. And you want to make sure that you have those betterments and improvements covered on your personal policy. So your personal policy is going to cover, obviously, all of your personal property. So furniture, I like to remind people of high dollar items, firearms, fine art, jewelry, anything like that. You want to make sure it's outlined. I always recommend taking a couple pictures or doing like a little video inside of your home. And you can send that over to your personal agent so that they have an idea of what the inventory is that they're insuring. When it comes to jewelry, firearms, it's also a really good idea to have some type of photo documentation on file so that if your insurance company is pushing back when some type of loss occurs, you're able to get the proper coverage that you need. So personal property and betterments and improvements to the condo are the two main things that I want to go over in terms of your HO6 policy. And if anyone has any questions regarding betterments and improvements, feel free to type them in the chat. And then at the end of this, we're also going to pause and allow you to ask questions so we can do like a live Q&A. And if there's any questions for the board, for the management team, they'll chime in on that as well. So neither the association, the board of directors, or your property manager is in a position to tell you what you should insure your unit for. That's going to depend on the interiors within your specific unit. I'm sure that they vary from condo to condo. So talk to your personal agent about that. They can make a suggestion. The amount of the insurance that you carry is really specific to each person. A lot of times your own liability policy is going to be rolled into that. And if that's the case, you really need to look at what your assets are. Everyone is going to have something different that someone might go after in the event that you are sued. So talk about those things with your insurance agent. They can advise you on personal coverage. Personal property has two different main deductibles. And I'm sorry, not the personal property, the association property policy. Two different main deductibles. The first one is the standard deductible, also known as all other perils. And in this situation, that does include water, which is the majority of the losses that we see in communities like yours. So that's $25,000. And then the second deductible that we have, which is this is a high deductible. It's called all wind and hail. And so this is going to cover any type of windstorm, hailstorm, some of these crazy events that we've started to see in Texas. And that deductible is 3% of the total insured value of the property. The reason it's really important that you understand this is because this is such a high deductible. This is normal. This is standard in Texas. We see them anywhere from 2% to 6% in communities like yours. And the 2% is usually if someone is buying it down to get it a little bit lower. So in this situation, total insured value for insurance purposes is just under 18 million. It's 17,797,000. So if you take the 3% of that, that puts you right around 533,000. So essentially what that means is, let's say a really bad hailstorm comes in town and it rips up the roofs, it damages the roofs, and the damage to the entire community, cumulatively, exceeds the deductible of $533. In that situation, the association is probably not going to dip into reserves and just take out, $540,000 to pay the insurance. What they're probably going to do is a special assessment. So this is where I really want y'all to take notes. This is one of the things I want you to look on your policy to make sure you have. And if you don't see it on there, please ask your agent. Loss assessment coverage. Loss assessment coverage is what is going to help you pay your portion of that deductible if a really bad storm comes through and the association has to assess for that 3%. Again, make note of your questions. I'm sure some of you are going to have questions. So here. I don't know if you can see my mouse, but it's right here. So you have the teal where it says, what should owners buy? 2 paragraphs above that is where it'll say 3% of the total insured value. So that's how we get to the high deductible. So again, loss assessment coverage is something that you want to make sure that you have anytime you live in a community like this. The second thing is going to be the standard deductible of $25,000. So if that standard deductible would apply to your unit, let's say there's a medical issue, you're taking a bath, you pass out, and the water just keeps running and running and running, and no one realizes it until like your neighbor next door starts to get flooded. They come over, they call the ambulance, they realize the water's been running for hours. So let's say that the damage exceeds the deductible of $25,000. So we've got $50,000 in damage, multiple units are involved. In that situation, if the loss originated in your unit, then property code does allow the association to bill your unit back that $25,000. Our goal is never for an owner to pay $25,000 out of pocket. It's to make sure that you have the proper coverage in place on your personal policy, which is going to be your dwelling coverage. So your dwelling coverage is going to be completely different than the alternative living coverage that I mentioned a minute ago. So you want to make sure that you have at least $25,000 in dwelling coverage. I feel that most of you probably do. And that dwelling coverage is what would kick in if you are ever billed back that deductible. Those are 2 completely separate coverages. So that's why I want to highlight both of those different deductibles. If there's a fire in the building, and let's say it's not the fault of an owner, let's say it's a common area, something crazy happens and the association has to pay that. The fire deductible would also be $25,000. In that situation, we'd have to look at the case. Maybe the board would take it out of reserves. Maybe they would assess it. But again, the dwelling coverage is what would help pay for that if that deductible would apply. So if you have any questions about that, let me know. Otherwise, I am going to scroll down just a little bit where it says, what should unit owners buy to supplement? So I'm not sure if there's any investor owners on this call or anyone that leases out your unit, but if so, a couple different policies you should have. So you have your master policy, which you're paying for through your monthly assessments. That's what the management company is working with the Alliant on, and that's what we're providing as your broker. The second policy is your HO6 or Texas Condominium Owners Policy. A lot of times when people are moving from a single family home into a community like this, sometimes the policy is written incorrectly, or maybe sometimes they have a renter's policy. As an owner, you should not have a renter's policy unless you're renting out your unit. And in that situation, you would have both. You'd have the owner's policy and the renter's policy. So just make sure you have that. Make sure somewhere on your policy it says HO6 or condominium. If not, that's definitely a question that you want to bring back to your agent and ask them about that. That should include your betterments and improvements. That should include your dwelling coverage. That should include your special assessment coverage. And then next up, one of the things that we have on here is alternative living expense. The alternative living expense is typically not automatically included in your policy. This is something that you might have to ask for or add back in. It's a very reasonable type of insurance or a specific peril item that you can add on to your policy. It's usually not more than like $100 a year. So the alternative living expense is going to kick in if your unit ever becomes inhabitable. So let's say there's a fire, part of your unit is burnt down and you can't live there while the repairs are being made. Sometimes when that happens, it can take a little while before the actual construction starts. It could be water, significant water damage and you're having your floors pulled up, mitigation is happening, so you can't live there during that time. Whatever the reason is, whatever the cause of loss is that prevents you from living there, that's why you want to have the alternative living expense. And that alternative living expense is going to pay for you to live somewhere else while your primary home, which is covered under your policy, is not habitable. So we've seen it a couple times on some of the associations where we insure where there's been a really bad loss and multiple families have to move out all at once. Sometimes your carrier might push back a little bit. And if that's the case, I'm going to give you my contact information at the end of this. It's actually on this document that we're sharing with you. And if you have questions or something doesn't sound right, you can always call me and I will help you advocate for yourself. I will tell you the questions that you need to ask. If there's a policy that you want me to review, you can send it over to me. I just ask that you do review it first before you send it over. So if there's something like major missing, you can correct that before you send it over. So alternative living expense, it's an optional expense, highly recommended. It's another one of those sleep at night coverages. You might pay $100, $200 a year for $10,000 in coverage. And I'm telling you, it takes a while to get back in your house whenever there's a really big loss. So I kind of already touched on the liability portion, which oftentimes is included in that Texas condo owners policy. In most cases, the association policy can be assigned to another unit. I touched on that just a little bit, and I'll pause for questions at the end because I know that's usually where someone wants to talk about an if-then scenario or have questions, and I'm happy to answer those. And
Hey,
then
Chelsea, they're viewing my screen. I'm sorry to interrupt, but do I need to scroll down at this point?
so right now, yeah, you can go ahead and scroll down to page 2, please. Okay, so let me go up just a little bit. Here we go. Okay, I kind of already covered this, so I'm going to start right here. We highly recommend that you speak to your agent about undetected or slow water leaks. Okay, there's just a couple coverages that we see from time to time that might be excluded on a policy. If you're with a popular personal lines carrier, State Farm, Progressive, Farmers, Allstate, Liberty Mutual, sometimes you just want to do a quick glance over and make sure that none of these are excluded. These exclusions are typically not on the first page or the bill. It's usually like page 50, page 70, kind of deep in the policy. So first thing that you want to do is ask your agent to give you a full copy of your policy. Sometimes you have to ask 2 or 3 times to get that. Usually it is not the full policy is usually not saved on the online portal. Some companies do save it. So send your agent an email and just say, can you please send me a full copy of my policy? And again, they'll probably respond with what's called the declaration pages, which is just the first like 5 to 10 pages. It's a summary of the policy. You want the full policy. You want to look over all the exclusions. Some of the exclusions that we see come up is repeated seepage, leakage, or any type of slow leak. Because we see these come up so often in communities like yours, we want to make sure that if there is a slow leak, you're covered. Sometimes you might not know until several days into it. And if that's the case, then we don't want that to be excluded. So look at slow leaks and just make sure that you have coverage for that. Sometimes you can have them add it back in at no additional cost, or maybe it's $12 or $20 a year to add that back in. But we do find that to be pretty important. The other thing is mold, mold and fungus. Again, it kind of goes hand in hand with water, which is the most common type of leak that we see in these communities. So if you have an exclusion on mold and fungus, I do recommend asking them if they can add in some coverage for that. Personally, I would probably buy the highest limit that they offer. They usually limit it at like 10,000, 15,000. But when you have to do a full mitigation and rebuild because of any type of fungus or mold, it can get pretty expensive. So if they're offering you, 15, 20, 25,000, and it's pennies on the dollar, we're talking less than $50 a year, I do suggest adding that onto your policy. Okay, this is just talking about renter's insurance. You shouldn't have a renter's policy unless you're a renter. I kind of already touched on that. Storage units, so ground level, ground floor, parking garages, anything like that, that's not, which I don't think they apply here. Smokey, is there any type of storage unit that's not attached to the dwelling? So like,
no, there is not, but all the garages are beneath the units.
Right. The garages are attached to the house. So in that situation, it's okay. Yeah. So the storage wouldn't really apply. If you were to have storage offsite, or maybe you have a storage unit that's not at your home, it's like down the street at, somewhere, a third party that you rent from, make sure that you have your storage unit listed on your policy so that whatever property you have in your storage unit is also covered on your condo policy. Sometimes we see communities that have a storage unit that's, like on the first floor or a couple roads over, something like that. But it doesn't really apply here. But if you have a storage unit offsite, the same thing would apply. Okay, this is kind of a big one. We have homeowners call us sometimes, or maybe they'll get a copy of the certificate of insurance and call the insurance company directly. So if you think that a claim should be filed, the very first step is going to be to call Smokey, call your property manager. He's probably going to call me, consult with me, make sure that the board is aware of what's going on as well. And then essentially we will talk together, look at the deductibles, talk about the type of loss, and then decide if a claim should be filed. The board of directors with management are the only people that can file claims on the policy. So please do not call me and try to file a claim directly. Please do not call the insurance company and try to file a claim directly. The proper channel would be going through management, who will then consult with me and the board. If you need to file a claim on your personal policy and you have questions, I don't sell personal coverage, but I'm happy to help you and happy to help answer any of those questions. Or maybe if you're not sure if it's going to go on your policy or the master policy, same thing, loop Smokey in, and then the 3 of us can hop on a call and go over those coverages together. Okay, next up, certificates of insurance. So usually if you have a loan on your house, usually once a year, they ask for a certificate of insurance. Sometimes they want to see a loan number or a clause number or some type of specific information that's specific to your unit on that certificate of insurance. We're happy to do that for you. Typically, we turn them around in 1 business day. So the email address that you're going to submit that to is at the bottom of this in bold. It's hoacerts@alliant.com. It's easiest to just email that. Like if you get a letter in the mail, either take a picture of it or scan it in and send the exact verbiage to that email address. Because again, sometimes they're asking for very specific things. And what our team will do is they will customize it to how your bank or your lender wants to see it. And then they will send it back to them and copy you in. So that way you can see that the person's been responded to. You also have a copy of it for your records. Or maybe if they had a question about one of the coverages or there's a change that they wanted to see, then they can just work directly with our certificate team. Saves a lot of time, saves a lot of back and forth. And then at the very bottom, again, my name is Chelsea Storms. I'm on the Texas condo team at Alliant Insurance. I have my cell phone number and my email address on here. I welcome you to reach out if you have any questions. With that said, I think I've done a pretty quick overview of the FAQ, and I wanted to pause and see what questions we have. It looks like there might be one in the chat. Give me just 1 second. Oh, that's just Smokey telling me.
No, it's okay. So what I'd like everybody to do, if you have any questions, please raise your hand. We'll go in order. Nobody. No
When we
questions.
do these in person, usually questions is like 15 to 20 minutes. So don't be shy. I know you might be eating dinner right now, but that's okay.
All right, Chris, go ahead.
Hey, yeah, thank you. I did have one question. I just wanted to make sure I understood, Chelsea, something you said earlier, if I caught it wrong or if it was right as I heard it. So did you mention that for people who have renters in there, so, kind of like a landlord, did you mention that those like we should also have, in addition to, of course, a dwelling, like a renter's policy or whatever, have a homeowner's policy so carrying both at the same time? Is that correct?
That's correct. So you're going to have the master policy, which you pay for through your assessments. That's going to cover walls in or walls out. I have to look at it and see. And then your HO6 policy is going to cover anything underneath the deductible or your deductible if a loss originates in your unit. And then your renter's policy is essentially going to cover their liability if they cause some type of issue, as well as their personal property. So the condo owner's policy in that situation would be very inexpensive because you don't need to cover personal property or anything like that I'm assuming would not be stored there if you're leasing your unit. But you would still want to carry at least $25,000 in dwelling coverage and also the special assessment coverage, because if a special assessment happens, if there is a really bad storm that comes through, I mean, sure, you could self-insure and you could pay it out of pocket, right? You have that option. But our goal is not for anyone to have to pay out, a bulk amount of money. We would hope that you would have the insurance in place to support that. If you're choosing to self-insure, we can't make you carry it, but it is suggested that you do.
Got it. Okay. Yeah, that's very good information. Thank you.
And then I also recommend, if you rent your unit, having a copy of your renter's insurance in place. We have seen some crazy stories where renters do some crazy things that cause a lot of damage. And if their insurance isn't adequate, or if you don't have a copy of it, or maybe it's expired, it could be very challenging for you to file a claim on their insurance. And then oftentimes we see the owners get stuck with something that really was their tenant's responsibility. And again, that wouldn't necessarily involve the association. That is an agreement between the owner and their tenant. But just risk management, words of advice, have a copy of your tenant's policy on file. Any other questions?
Yeah, I have my hand up. I just wanted to go on the backside of that. If you are within a lease with an owner, is it feasible to ask them for the copy of what coverage they have to bring to your agent to show them this is what's already covered? How do I cover the extra?
Are you asking if the tenant would ask or if the owner would ask?
Yeah, no, if the tenant does, because I mean, we want to protect everybody living in the community. So if the tenant is having his renter's policy covered or whatever, is it something he should do to verify that the owner has their policy in place and compare that with him making up the difference?
Typically, that would not be necessary. I guess some tenants might want to see that. I think providing them with a copy of the association's master policy and then a copy of the tenant's lease, because the tenant's lease is what's going to specify what the tenant is responsible for. Like my suggestion as a property owner would be kind of like worry about what you're supposed to cover. So if your lease requires that you carry X, Y, and Z in certain limits, then as a tenant, that's what you would be asking for. And then anything over and above that, of course, would be the owner or the association's responsibility. I mean, there's no harm in an owner providing their insurance to the tenant. I can't think of any reason that that would be necessary, though. Is this a thing? Like, do we need to talk about this?
The only reason I brought it up is I've ran into a situation to where the tenant was under a lease and everything was good, everything was fine, something happened, found out that the owner didn't have the proper coverage. And the tenant only had his coverage, and there was a gap in there, and there was a large sum involved.
Like a deductible?
Yes.
So in that situation, yes, the owner should have their HO6 policy in place. And if they were billed back for a deductible, then their dwelling coverage would pay for it. If the owner is choosing to self-insure and not carry insurance, that doesn't involve the tenant. That's then an association and owner issue. And regardless of whether the owner, again, I can't give legal advice, but the way that that would be handled in terms of insurance is that the association would bill back the deductible to the owner, like on their account, like you would any other charge. And how that owner pays for it is their prerogative. What I would suggest that owner do is file a claim on their insurance. Their insurance would pay them, and then they would pay the association. But whether that owner gets paid by insurance or not, they're responsible for that deductible as outlined in the governing documents. So that it's a total legal question. I can just tell you how I've seen the process handled. But the
Sure.
tenant,
Thank you.
the tenant wouldn't get brought into that. That would be an association and owner issue. Did I see another question come up?
I think
Yeah,
someone
I
just
have a-
joined. That's about it.
I have a quick question, Chelsea. Can you speak to specific Texas language about hail and wind damage to roofs? Is there anything particular about that we need to know about as far as like things? Does something have to penetrate the roof for it to be covered? How does that work in Texas?
So it's not going to be so much like the Texas property code. It's going to be the different insurance policies with each carrier. So a lot of times in Texas, you're going to see two different types of wind deductibles. You'll see like all wind hail, or you'll see what's considered like named storm or wind hail storm as outlined by the Meteorology Center. In this situation, there's not two different deductibles. There's only one, and it covers all wind hail at 3%, which is good, because when you see those different like named storm or just regular storm, usually the named storm is significantly higher. Like it would be like 5% or 6% rather than 3%. So in this situation, the policy is written in a way that all wind hail is covered under that 3%. Now, the damage would have to exceed the deductible for that to happen. You can have a significant amount of hail damage and it not meet the deductible. That's why these insurance companies place that at a higher deductible. That is their buffer to protect themselves. So you have $150,000. Let's say you have $150,000, $200,000 for the damage. That doesn't meet the deductible. So there's not going to be insurance coverage, but that's still significant, right? So in that situation, insurance wouldn't get involved, and more than likely there would be like an assessment, or if it's specific units and your documents state that certain things would be billed back to those specific units, and those units might be able to look into their own personal coverage. But, and then going back to the types of coverage you said, so a lot of policies, and I don't have this full policy in front of me right now, will exclude what's called cosmetic damage. So the hail comes through and it makes like what I call waves in the roof, where there's just like, you know, like punctures all over the roof, or maybe it dents equipment like air conditioners, things like that. But the equipment and the roof is still performing, meaning there's no leaking. It's still doing its job. In that situation, insurance wouldn't pay to cover it because it would just be considered cosmetic damage.
Okay. And so if
Does that,
we,
does that answer
if
your
we do,
question?
yes, if we do get, if we say it hails, it hasn't yet, but if it hails really bad and we can clearly see that there's damage to the, to our roofs, do we then go through the HOA first before we, or do we need to go through our personal carrier first on that?
So let's say a really bad hailstorm comes through. You know that there's a lot of damage, but you're not quite sure how much it costs. So we could have a talk about it. I would ask to see pictures. If we know for sure it's going to exceed the deductible, then yeah, we'd go ahead and file the claim. If you're not sure, then oftentimes what we'll do, and especially whenever it's a hailstorm or any type of heavy storm, a lot of times there's immediate like solutions that have to be provided because maybe there's water coming in or gutter falls that's causing additional damage. So in that situation, we would say have a contractor come out and start working on that estimate. There's two ways to do it. If you file the claim, they'll send an adjuster out. The adjuster will work with you on the estimate. The alternative would be you have the contractor come out that's doing the repairs and give you an estimate. Some associations are hesitant to put the association on notice and have the adjuster come out if they're not sure they're going to be a claim, if there's going to be a claim or not, because they don't want to start reporting claims and then there's no actual claim.
Okay, that was my concern. Sorry. Okay.
Yeah, so we would suggest that you call us as your broker. You send us pictures, you send us videos, and then we would kind of go from there depending on the damage.
Sounds good. Thank you.
Of course.
And for the owners, Chelsea, you mean they would contact Smokey and then he would?
Yep. Owners
with
are always
them?
going to
Yep.
contact management. I think my camera is stuck. Sorry about that. Any other questions? So again, the couple things that you want to look for on your policy is dwelling coverage, loss assessment coverage, alternative living expense, and then you want to scroll to or flip to the exclusion page and make sure that there's no exclusions that are jumping out at you.
Hey, Chelsea, real quick. I'm having trouble attaching your presentation to the chat section. Am I okay to send that out to the community?
Yep, you can send
Okay,
it
thank
out. We recommend putting it on the portal, including it in your conveyance package, and then sending out an email. That way they all have my contact information. So if they have any questions, they can contact me. Also, if the insurance changes or the deductibles change next year, just know that this is a living and breathing document that follows your policy. So there is a good chance that if there's a change in the policy next April, then this document will be updated and redistributed.
Mark went ahead and raised his hand after that.
Oh, yep, go
Hey,
ahead.
A quick question. If, say, there, somebody has, because we had this a few years ago, maybe that a pipe burst in your neighbor and it bled into your place. Who would you suggest they start with on that?
Management. Okay, well, actually, before that. So everyone has a responsibility to shut off
I was
the
going to
valve.
say, Chelsea, be careful.
Yeah. Yeah. So very first thing that you're going to do is shut off the valve, protect your own property, prevent damage from continuing, right? So anytime that there's water running, we want to shut off the valve. If you're not sure where the valve is to your house to shut off the water in case of an emergency, please either get with Smokey or get with the board or a neighbor so that you can establish that. And I recommend making sure everyone that lives in your house, if you have a spouse, if you have kids, make sure everyone knows where the shut off valve is. And I'm telling you, it's the craziest times that something happens with water, but it's never like, during the day when everyone's just at home. So make sure that you can shut off the water. After you shut off the water, make sure that there's no water running everywhere, continuing into your neighbor's house or leaking from the second floor to the first floor. If so, put buckets under it, do what you can to contain the water. Next step should be calling management and letting management know, hey, there's a water loss. I need some help with this. Management is probably going to ask you, how bad is it? Can you send in pictures? Depending on how many units are affected, how bad it is, they might tell you you need to call out your own, or let's say the source of the water as well. They may tell you you need to call out your own contractor and then send over a copy of their service notes. If it's something with the common area pipe, then more than likely Smokey's going to send out a contractor. So depending on what's going on, how it's happening, first step is going to be mitigate the loss, mitigate the water, shut off the water. Second step is going to be send some pictures in, document, let us know what's going on, what caused it, how bad it is, and then we'll go from there. In that situation, let's say there's multiple units involved, or maybe a roof is lifted and water's pouring in the building, something like that. Smokey's going to then call me. We're going to consult with the board, make sure we can put the carrier on notice, and then get an adjuster out as soon as possible. Sometimes it's like, let's say that we know it's not going to exceed the deductible of $25,000. Maybe it's $5,000, $8,000. It's not that bad. It's just inside one person's unit, and it's their own pipe and plumbing that caused it. In that situation, you are going to want to call out your own service contractor and have notes. And then that's when you would file something on your own personal policy, and the master policy wouldn't get involved. And in that situation, you're welcome to still contact management and let them know what's going on. But they're probably going to advise you to file a claim on your personal policy.
Yeah, and for everyone on the call, your main water shut off is in the garage.
I really think that'd be a good thing, Mark, for the next update, just to have it in there.
Yeah, we've sent it out before, but we'll send it again.
Other than that, I think you answered my question and the other ones. Thank you, Chelsea.
Yeah, good questions. Like I said, if something comes up later, or maybe there's some neighbors, well, I know that there's half of the neighbors that weren't able to participate. So please share this message with them, and they're welcome to reach out to me.
Yes. Chelsea, thank you for taking the time to meet with us tonight. It was very informative. I hope everyone got something out of it. I know I did. So thank you.
Yeah, of course.
Yes. Thank you, Chelsea. Definitely.
Thank you all. Have a good evening.